Hey everyone, welcome back to Corporate Decoder, the place where we unravel the secrets hiding in plain sight within company reports. Today we are diving into Apollo Global Management's latest filing, and let me tell you there is enough jargon in here to make your head spin, but we will break it down so you can see what is really going on. Alright, so what we have here is a current report from Apollo Global Management Inc. filed on the 9th of February 2026. Think of this as a quick update to let everyone know about significant events happening with the company. It is not a full deep dive like a quarterly report, but it does highlight important information. The day of this report is the 9th of February 2026, and the company is Apollo Global Management Inc. Now, you probably know Apollo as a major player in alternative investments managing billions of dollars. They are involved in private equity credit and real assets for institutional investors and high net worth individuals. They are basically big money managers for the big players. The report lists several types of securities that Apollo has that are traded on public exchanges. The most common is their common stock traded under the symbol APO on the New York Stock Exchange. They also have preferred stock series A and something called subordinated notes, which are basically loans the company took out that are lower on the priority list if things go south. These notes are kind of interesting. They are a long-term debt instrument due way out in 2053, meaning Apollo borrowed a lot of money. The 7.625% is the interest rate they are paying on this debt. It is important to note they are junior subordinated notes, meaning if the company cannot pay its debts, these note holders will be paid after other creditors. Now let us get to the juicy part. Item 2 in this type of report is usually about the company's performance and financial situation. On the 9th of February 2026, Apollo announced their financial results for the fourth quarter and the full year that ended on the 31st of December 2025. This is where we get the numbers that tell us how well the company did. They released a summary press release, which is basically a quick highlight reel of their performance and a more detailed earnings presentation. Think of the press release as the headline and the presentation as the full story with charts and graphs. Both are attached to this filing so we can dig into them. These documents are crucial because the earnings presentation will contain the actual financial tables and key performance indicators. While this current report itself does not deep dive into the numbers, it points us directly to where those numbers are. We have to look at those attached exhibits to get the real financial picture for 2025. We will not go into full detail on those here as they are separate documents, but the filing indicates they are available for those interested. Generally, when companies report their year-end results, they will highlight metrics like assets under management profitability growth in different business segments and any changes in their debt or equity structure. Finally, there is a reference to interactive data files. This is part of a push by the SEC to make financial data more accessible and easier to analyze automatically. It is like giving computers the ability to read and understand the financial reports directly, which is good for transparency and for the automated analysis tools that many investors use. Now, looking at these results broadly, Apollo released its performance for 2025. Companies like Apollo often see their fortunes tied to the broader economic environment and market performance. If the markets are up and investors are feeling confident, more money tends to flow into alternative investments like those managed by Apollo. Conversely, if there is a downturn or uncertainty, investors might pull back. Their ability to generate fees from managing these assets is key to their profitability. We would typically look for trends in their assets under management, whether it is growing or shrinking. Growth in assets under management usually means more fee revenue. We would also want to see how profitable they are on those managed assets, and if they are effectively managing their own expenses. Risks for a company like Apollo can include market volatility changes in interest rates and increased competition. An opportunity might lie in expanding into new asset classes or geographical regions, or developing new investment products. Based on this type of filing, they are signaling that they have released their 2025 results, and investors should look at the attached documents for the specifics. It is a standard procedure to announce financial results through a press release and a presentation. The core of what matters will be in those additional exhibits. We will be looking for consistent growth in assets under management, strong profitability, and a healthy balance sheet. Alright, that is our breakdown of this Apollo Global Management current report. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.